Many investors are picking up news from the media that the US dollar is in store for a long, protracted decline. Most people don't realize that this decline has been in place since 2002, and after 5 years, we've seen a substantial reduction in value in the US dollar. In fact, just over the last 15 months, the US dollar has declined about 16% against the Canadian dollar, about 19% against the euro, another 16% against the yen, and somewhat over 15% against the Australian dollar. There are some factors emerging in the markets right now which suggest that over the next 6 to 12 months, there'll likely be some form of trend reversal in the fortunes of the US dollar. First of all, the slowdown in the US economy has put constraints on consumption, and these limits will ensure that imports decline. At the same time, the weaker US dollar is beneficial for US exports and also increases the large amount of profits that US multinationals repatriate from other countries. This is all helping to self-correct the trade and budget deficits which have been in place for some time. Another factor that has emerged is the deleveraging of US financial institutions, which has resulted in an extreme markdown in asset prices in the US. This is proving particularly attractive to European investors who are likely to start bargain hunting with their strong euro sometime over the next 90 to 180 days. As US banks gradually rebuild their capital and investor confidence is restored, it's highly likely that the Federal Reserve will start to raise interest rates, and that should lend further support to the US dollar. Meanwhile, in Europe, companies are struggling to maintain their exports with the high value of the euro, and there are many calls for central bank intervention to support the US dollar and permit European companies to regain their competitive status. Despite reports in the media, inflation is unlikely to be a problem over the next year. Global competition will ensure that product prices and the prices of services remain in check. In fact, we're more likely to see more price deflation than inflation over the next 12 to 18 months. Commodity prices are probably close to or at their peaks and should sell off too in the next 6 to 12 months, and that too will lend some support to the US dollar. In summary, the weakness we've seen in the US dollar over the past 5 years, which has reached a crescendo just over the past 12 to 15 months, has made the US far more competitive than a lot of pundits recognize or give credit for. And it's inappropriate at this stage to think of selling the dollar short. Anyone who's done so in the past on a long-term basis has lived to regret it.